Yo, what's going on YouTube? I go by the name of Dumelo, and welcome to my channel. Uh, in this channel, I'll be posting my flow with the market. So I'll be flowing with the market, like how the market is going, and I'll be giving my perspective using ICT. So, disclaimer is that I'm not a professional trader, I'm not a financial advisor, but I am a learning trader who's journaling his performance or his trade on YouTube. So I'm basically posting on YouTube to journal my trade from a, a beginner trader all the way until I become a professional trader, right? So I'm basically not new in trading, obviously. I've been trading for a while. Uh, so, and also I'm trying to build this I'm trying to be mentally strong in trading. So I'm just building consistency and yeah. So let me get into my analysis without any further waste of time. So basically, for me, my go-to time frame is a daily time frame. So basically, each and every day when I analyze, I start from the daily time frame. And since I'm a scalper trader. So I don't need a reason to zoom out price like this. So basically, I focus on current price action, right? So basically, I focus on the latest five candlesticks, right? So counting like from here, 1, 2, 3, 4, 5. I'm looking at what price did within these five candlesticks, right? So looking at the previous candlesticks, as you can see, so we basically, I'm gonna start from this candlestick. So looking at this candlestick, we basically swept the low of this candlestick. As you can see, we swept the low of the candlestick. After sweeping the low, we swept the low and closed below. So sweeping the low and closing below, this indicate the strength. This indicate that price is more likely to continue going lower, right? So price is likely to continue to sell lower, right? So on the next day, which is this day, now our draw on liquidity will be this low and this high, right? But our go-to draw on liquidity uh is the low, right? Our go-to draw on liquidity is the low, mainly because we swept our previous day low and closed below, which shows bullish pressure, bearish pressure, I mean, right? And then the following day, which was Wednesday, we actually didn't do anything, right? Not doing anything, that doesn't mean price, the market doesn't say anything or doesn't give us anything, right? So this candlestick might be in a form of a retesting or filling gaps within this candlestick. So this Wednesday candlestick might be filling gaps or tapping into an area of interest within this Tuesday candlestick, right? And then what we can see is Thursday managed to sweep the low of Tuesday, which was our let me see our range, right? This is our range because was playing within our draw of liquidity. It didn't sweep the low, it didn't sweep the high. So Wednesday was playing within our draw on liquidity, right? So, but then we still having that selling perspective because Wednesday was in a form of a retest to sweep internal liquidity or to tap into fair value gaps, right? So, and then Thursday we managed to sweep the low, right? We managed to sweep the low and closed below, right? This also still shows bearish pressure. This still shows that we are still uh, going to sell, right? And then same thing Friday candlestick swept the low of Thursday, right? So after sweeping the low of Thursday, it closed below, right? After closing below, meaning it got out of the range of Tuesday, so of Thursday, I mean. So meaning this was our range for to trade within Friday, and then we actually closed below our range, meaning closing below, we're creating a new range. So this will be from our high, this our new range here, this high, and this low will be our new range, right? So having our new range, we have to go back to our previous candlestick in order to try and anticipate what's going to happen next, right? So looking at this Thursday candlestick, Friday managed to sweep the low first. Check First thing on the checklist, we swept the low. After sweeping the low, second checklist is second check is we closed below, right? Meaning we formed a new range, and this is our new range to trade within, right? After having this range, I go to a lower time frame to try and see what price is telling me in a lower time frame. But then on a bigger time frame, I have this perspective that price might sell to the lower side, right? That price might sell to the lower side. And also one thing I like to highlight also is the closing price, right? So price closed here. I like to highlight the closing price in order to predict what's going to happen next, right? In order to predict what's going to happen next. So basically, I don't teach trading, right? But then if you want to learn this concept, uh, check out in my profile, right? Or you can leave a comment, and I will personally DM you and then show you where you can basically learn this concept, right? And then yeah, I like to highlight to draw closing price. So let me switch on this indicator to be able to, yeah. So let me go back. Now I move a time frame lower, right? So what I basically do is whatever that's happening outside our range is just noise, right? So we're gonna do our best to avoid noise. So whatever is happening outside of our range is just noise. All right. So let me basically adjust these lines. Let me adjust this line so that my 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 chart could look proper, right? So let me adjust this line. Uh, so as I was saying, whatever that's happening outside of the range, outside is just noise, right? So we just focusing on what's happening within our range, right? From a 4 hour time frame, for 4 hour time frame, and the same flow, the same analysis I did on the daily time frame, I basically do it again on a lower time frame, right? I basically do the same analysis on a lower time frame. uh so I'm still adjusting this, so I like my chart to look proper. So the closing price is the closing price. Yeah, so let me remove this arrow, right? So uh so let's analyze. Remember, we look for our five most recent candlesticks, right? So it's 1, 2, 3, 4, and 5, right? So on a 4 hour time frame, we swept, we did sweep this uh low of the candlestick there. So let me change so that the chart cannot be confusing. We swept the low of this candlestick, but then failed to close within, right? Meaning our draw on liquidity was this high, on a 4 hourly time frame, right? But price did not sweep this high, right? First, listen, let's look at price. So this high was never swept, right? Meaning there is a bunch of liquidity resting above this the high of this candlestick, right? So let me pull this line here and explain what's going on. So I want us to look what's happening above the high of this candlestick, right? Because price failed to close below this candlestick and we expected the high to be swept, but then price did not sweep the high, it eventually sold. So looking at above this candlestick, we have what we call a fair value gap, a gap between this candlestick and this one here, right? This is a fair value gap. We have what we call a fair value gap, right? So this fair value gap might be our draw on liquidity, right? Price might draw to this fair value gap and continue to sell according to our perspective. Remember, on a daily time frame, we are looking for price to come and sweep this low, right? So price might go to this fair value gap after tapping into fair value gap and then sell to the downside, right? So basically we have this draw on liquidity, but then I don't like to put zones, so we'll just leave this line here so that our chart can, you know, look a bit proper, right? Because I like to keep my charts clean and proper, right? So continue with that, we come to this candlestick, right? So what happened is it closed below this low, right? Closed below this low. After closing below this low, we go to the next day. The next day, which is I mean the next 4 hour candle, right? So please excuse me, I'm used to analyze with the daily time frame, right? So the next candlestick swept the low of this candlestick, right? It swept the low of this candlestick and closed back inside, which is a reversal pattern, right? Which is a reversal pattern to the upside, right? So I'll also explain a trade that I took from this area here. So after sweeping this low, we expected what? Since this low candle swept the low of this candlestick and closed back inside, we'll be expecting a move to the upside. So we're expecting the sweep of this candlestick, right? Expecting the sweep of this candlestick, and price did sweep and closed above, right? Did sweep this candlestick and closed above. So what are we expecting now for this coming week? We're expecting this high to be taken out. All right, we're expecting this high to be taken out, right? We're expecting this high to be taken out, and our draw on liquidity is this line here, meaning our take profit for now for internal structure is this line here, as we are looking for price to come back and tap into this fair value gap, right, and give us those reversals to the downside. But we can't wait, we can't just sit around if an opportunity presents itself, right? So we have to look for buying opportunities to the upside, right? So I took a position here on Friday. So let me go to the 15 minutes time frame and explain the position that I took, right? So this is the closing price, this is the draw on liquidity. So on a 15 minutes time frame, here that's when we swept the 4 hour time frame, I mean the 4 hour candle, and went to the upside, right? So let me look for the change in the state. So let me explain the trade that I took. So the first thing that I looked for is the sweep of this low, right? So the sweep of this low basically generated from this movement, right? So this movement was like an impulse correction and then impulse. So this corrective move gave me a, a high, right? Gave me a high that if price come above this high, it will create what we call a change in the state of delivery, right? So price basically swept the low and closed back inside. So this is the last candle of the 4 hour, right? And closed back inside. So after closing back inside, price retested, right? After retesting and then gave a continuation. So here it's where I caught my position, right? First of all, uh, since price have been closing all the gaps in here, I didn't have a gap to trade from. Now the first gap that I look for was this one, right? This is the first gap that I looked for, but I didn't have a proper confirmation to trade this gap right about here, because once price tapped, it failed. It created failed lows, which is not a proper, which shows you that price is still seeking to sweep some more liquidity, right? So what I did is place my Fibonacci level on the high of the sweep, right? And then look to trade from 50% of this sweep right about here with of this movement to the downside, right? Which caused the change in the state of delivery. Once price came here, so the rejection, uh, once price here started rejecting to the upside, and then price closed above this the candlestick that tapped into 50%. So the candlestick that tapped into 50%, the market managed to close above it, which shows that we still have those movement to the upside. So that's when I took my position right about here and target this high here, and then stop loss below here, right? Which is a nice 2.75, right? Which is a nice 2.75. So I was just breaking down the previous trade, but then now let's look at what we anticipate for price to do. So remember, this is our draw of liquidity, and this is our closing price. Let me remove the closing price line, right? And look at price from here. And then let me remove something so that my chart can look proper, right? So we're gonna look for here, right? So the first thing that we can see, we have it's a fair value gap right about here, right? It's a fair value gap right about here, and an order block here, and an order block right about here, right? So what I'm anticipating is for price to drop, right? And then give us those continuations, right? And we also have another uh, fair value gap here. So price can either drop to here and then give us those continuation or reverse from here. So any formation, anyhow, whenever we get a confirmation, then I'll take my buying position to push price to sweep this draw on liquidity, tap into the fair value gap, and then we'll see if we get a reversal pattern to sell to the downside, right? To sell to the downside. So that's my view on gold. uh, and that doesn't mean price will follow my pattern, obviously. And also, if it happens that price managed to come up and sweep this draw, this daily line, remember this our daily line, if it sweep and closes above, then we'll change our perspective from selling to looking for buying opportunities. So if you really want to learn this concept, or you want me to explain some of this concept, I don't really post teaching, but then if you want me to post, then I'll share. But then personally, I prefer to journal my trades, to journal my positions, and yeah. So next time when I post, I'll basically, it will be like this, but then cleaner and proper, because I like to keep my charts proper and very clean. So that's all from me, and please forgive me for my English. That's, you know, uh, yeah, but then no problem. We'll meet on another